Trinidad and Tobago, and welcome to the Bourse Report. Today, we're taking a look at the conglomerate sector, and we are focusing on some results coming out from Massy Holdings Limited as well as Grace Kennedy Corporation, or both groups would have had somewhat different fortunes, but for different reasons. Let's take a look at the results and what investors could expect in the coming months ahead. Turning firstly to Grace Kennedy Corporation, or GKC, for that first quarter of 2024 ended March. And the group would have reported a diluted earnings per share figure of 9.4 cents TT dollar equivalent, a 2.4% increase from the 9.1 cents reported in the prior comparable period. Now, on the good side of things, total revenues were up just about 8.3% from 1.692 billion TT equivalent to 1.833 billion TT equivalent. Overall profit from operations also increased somewhat more modestly from a 3.8% increase to 129.5 million from 124.7 million. Overall, net profit attributable to equity holders up just at 2% to 93.5 million from 91.7 million in that prior comparable period. Now, when we take a look at profit before tax by segment in contribution for Grace, we see that there were some notable changes. Food trading in that pink segment, the largest contributor traditionally to GKC's profit before taxes, has been or would have declined just about 2% from 101 million TT equivalent to 99 million odd. Money services also fell just about 9% from 34 million to 31 million TT equivalent in that green segment. On the positive side of things, the banking and investment segment up from 7 to 9 million TT equivalent, and the insurance segment doubling from 8 to 16 million. Of course, acquisitions contributing to that growth in profit before tax, certainly over the past year or so. Of course, these two segments are the smaller of the two segments that Grace Kennedy currently operates in. So some challenges ahead, but again, a net positive, although more modestly, for Grace Kennedy in that first quarter of 2024. When we take a look at the margin story, there have been some challenges with operating profit margins in that red column, falling from 7.4% to 7.1%. With profit before tax margins also declining modestly from 7.9% to 7.4%, perhaps reflective of a still persistent inflationary environment, which GKC and all other companies are continuing to face. So certainly that is something that investors and the management team of GKC will have to navigate very carefully over the coming quarters. Now, from a valuation perspective, GKC is looking more and more attractive. In fact, based on its trailing 12-month earnings price earnings ratio, it's trading at a price earnings level of 11.4 times compared to the first quarter of 2023, when it was trading at a trailing price earnings ratio of 14 times. So certainly signaling that there is much more value on offer relatively for GKC compared to its own historical levels. And again, that growth has stabilized to some extent over the past couple of quarters. So at, again, that price of $3.86 per share, Grace Kennedy is trading at that price earnings ratio of 11.4 times, below the sector average of 14.2 times, and offers investors a dividend yield of 2.5%, below the sector average of 3.1%. But it's important to note that GKC pays its dividends in US dollars for shareholders. So with revenue growth in mind, keeping an eye on those lower margins, of course, looking at those relatively attractive valuations and continued acquisition activity, Bourse is maintaining its overweight rating on GKC for the time being. Turning very quickly to Massy Holdings Limited, or Massy, for its half-year period ended March 2024, the group would have reported an earnings per share figure of 14.2 cents, a 15.6% decline from the 16.8 cents recorded in the prior comparable period. Now, earnings from continuing operations would have also declined 14.5% to 14.3 cents per share from that 16.7 cents per share in the prior comparable period. Revenue from continuing operations did increase 15.3% from 6.78 to 7.81 billion. Overall, however, profit attributable to equity holders declined at 15.5% from 333 million in the half year of 2023 to 281.4 million in the half year of 2024. It's important to note that Massy would have disclosed that barring some one-off costs that they would have experienced in this first half of 2024, profits would have been relatively stable or consistent with that of the fiscal half year of 2023. From a segment contribution perspective, we can see integrated retail was up just about 2.5% from 308 million to 316 million. Gas products up just about 13.8% from 123 to 140 million. Of course, acquisitions last year filtering through into 2024's results positively. Motors and machines down just about 9% from 103 to 92 million, and financial services also down modestly from 45 to 43 million over the comparable half-year periods. In terms of margins, again, in the case of Massy, despite improving revenues, that margins, those profitability margins would have taken a dip. Of course, it's important to note that incorporated in these margins are some of those one, of course, that Massy would have mentioned. Operating profit margin in that blue segment falling from 7.5% to 4.9%, and PBT margin falling from 7.7% to 6.2%. So like Grace and all of the companies, maintaining margins in an inflationary environment is something that Massy's management is going to have to be cognizant of. From a geographical diversification perspective, however, it reads as pretty good news. Trinidad and Tobago, in terms of relative importance of contribution to PBT, continues to decline, signaling increased diversification for the group. Barbados maintains its has grown marginally over the past few comparable quarters, from about 12% to 14% in that green segment. The USA has grown from almost nothing in that purple sliver to just about 4% in terms of contribution to PBT. Guyana, of course, continues to grow in significance from 16% in the half year of 2020 to currently 26% in terms of contribution to PBT. And of course, with all the acquisitive activity last year, Jamaica would have doubled in terms of contribution to PBT from 6% to 12%, otherwise fairly consistent across the Eastern Caribbean, with some modest declines in Colombia from 5% to 3%. So the diversification story remains generally intact for Massy and is going to obviously pay, or very likely pay, dividends or rewards for investors in terms of earning stability as we move ahead into the coming quarters. So at a price of $4.18 per share, Massy is trading at a price-to-earnings ratio of 11.6 times, below the sector average of 14.2 times, offering investors a relatively attractive dividend yield of 3.8% compared to the sector average of 3.1%. So with that revenue growth in mind, continued efforts by the group in terms of integration of their recent acquisitions, that geographic diversification trend, so that built-in diversification certainly being a positive for investors, and relatively fair valuations, Bourse is maintaining an overweight rating on the group or Massy Holdings for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, enjoy the upcoming long weekend, and we'll see you next time on the Bourse Report.